In 2018, a shocking discovery was made. The richest 400 Americans paid a lower tax rate than any other income group. This revelation sparked outrage and ignited a debate about the fairness of the tax system. How could the wealthiest individuals contribute proportionally less? The answer lies in a complex web of legal loopholes, offshore accounts, and sophisticated tax avoidance strategies. Billionaires navigate this world with ease, employing expert lawyers and accountants to minimize their tax liabilities. While not all tax avoidance is illegal, the line between ethical tax planning and aggressive tax avoidance can be blurry. The implications of widespread tax avoidance by the ultra-wealthy extend far beyond mere revenue loss for governments. It erodes public trust, fuels social inequality, and undermines the very fabric of a fair and just society. When billionaires avoid paying their fair share, it places a disproportionate burden on the middle class and the poor. The time has come to shine a light on the shadowy world of billionaire tax secrets and demand a fairer, more equitable tax system for all. Billionaires often use trusts and foundations to protect their wealth from taxation. Trusts can shield income and wealth from estate taxes, passing down fortunes with minimal tax liability. Foundations provide tax benefits to donors while allowing them to maintain control over the donated funds. The complexities of trust and foundation law make it difficult for tax authorities to track and tax the wealth hidden within these structures. Critics argue that these structures perpetuate dynastic wealth and undermine public trust in the philanthropic sector. Addressing the loopholes that allow for the misuse of trusts and foundations is crucial to restoring public trust and ensuring that charitable giving serves its intended purpose. Charitable giving often serves as a powerful tool for billionaires to reduce their tax burden. By donating to charitable organizations, billionaires can claim substantial tax deductions, lowering their overall tax liability. Critics argue that the current system allows billionaires to exert undue influence on society. This concentration of power raises concerns about accountability and the potential for conflicts of interest. A more equitable system would encourage a broader range of philanthropic activities, ensuring that tax incentives do not dictate the direction of charitable giving. The globalization of finance has opened up opportunities for billionaires to minimize their tax liabilities. Offshore tax havens have become popular destinations for the world's wealthy to stash their assets and shield their income from taxation. Billionaires utilize complex networks of shell companies, trusts, and offshore accounts to move their money across borders. These sophisticated structures exploit legal loopholes and regulatory gaps to minimize tax obligations. The use of offshore tax havens has a profound impact on global inequality and tax justice. Developing countries lose billions of dollars in tax revenue each year due to tax avoidance by multinational corporations and wealthy individuals. The fight against offshore tax avoidance requires international cooperation and coordination. The consequences of billionaire tax avoidance extend far beyond finance, impacting the very fabric of society. When the ultra-wealthy shirk their tax obligations, it undermines public trust, exacerbates inequality, and jeopardizes the funding of essential services. Billionaire tax avoidance erodes public trust in the fairness and legitimacy of the tax system. This concentration of wealth and power undermines social mobility and perpetuates poverty. Billionaire tax avoidance starves governments of much-needed revenue to fund essential public services. Addressing the issue of billionaire tax avoidance requires a multi-pronged approach. By closing loopholes, enhancing transparency, and promoting a culture of tax compliance, we can create a fairer, more equitable tax system. One crucial step is to close the loopholes that allow billionaires to legally avoid paying their fair share of taxes. Enhancing transparency in the global financial system is paramount to combating tax avoidance. This requires greater information sharing between countries and stricter regulations on financial institutions. By cultivating a social norm that values tax fairness and compliance, we can create a system where everyone contributes their fair share to the common good.